Welcome, Money Buddies, to this week's episode of Money Talk. This week we're talking about planning, starting early, and the importance of planning well before retirement. I'm your host, Skylar Fleming, and let's get talking. Today, of course, you know it, it's going to be another great episode. Today's Money Buddy and I are talking about building a lifelong financial plan, why it's important, all the opportunity that you get when you start thinking about this earlier. This is something that I am obsessed about and something that I think everyone needs to consider. If you can start wherever you are today, and we're going to talk about how you can do that and how you can lay out this inventory of your financial life, you are going to be so much better off in the future, whether you're starting in your 60s, 50s, 40s, 30s, 20s, wherever you're starting. Getting started today with some sort of a financial plan is going to be extremely beneficial to your financial life. And it's going to allow you to take advantage of so many more opportunities. We're also going to talk about how debt can weigh down your financial plan. That's a big conversation, and how important insurance is, and how making sure that your liability is covered so that you don't end up in the worst case scenario and then your whole financial plan is ruined. There are a lot of great nuggets in today's episode, and you're going to love it. Of course, after you finish this podcast episode, make sure you go check out Financial Planning for Young Adults, my brand new podcast that you can find a link to in the show notes. I'm sure you're going to enjoy it, especially if you have some young adults in your life who could use some great financial planning advice. But let's get into it today and introduce today's Money Buddy. Today's Money Buddy is Jeff Panik. After almost 25 years of experience as a financial planner, Jeff knows that one of the most valuable roles that he plays is to help a client strike balance between financial obligations and true happiness. Jeff founded Balance Wealth Partners with a simple goal in mind: to create tailored plans for intentional living. And you're going to hear a lot of his experience come out in our conversation today. There was a lot of great tips and advice in this episode. So let's continue on with it. This week's money talking points are: 1, how important is a plan for our money? 2, why does money seem so overwhelming? And 3, how can talking about money help calm the overwhelm? And with those money talking points in mind, let's get talking and welcome Jeff to the show.
Thank you so much for having me, Skylar.
Yeah, this will be a ton of fun. I'm excited for this conversation. We're going to talk about building a financial plan, and there's this piece in here that you talk about, a financial life inventory plan, that I'm excited to learn more about. But we're going to jump into here at the beginning, the money talking points for this episode. And just as a reminder for everyone, these are just simple and easy talking points that you can really start a conversation with anyone, because that's the point of this podcast, is to go out and have money talks and talk about money more. So Jeff, this first question here for you is: how important is a plan with our money?
I think it's essential, really, to have a plan. It really is foundational. If you don't have a plan, really, you really don't have direction, in my opinion. And it's really hard to articulate what you're trying to accomplish, as well as just even simply developing habits that are effective and working through to meet certain goals. And, whether they're life goals, various things, if you don't have that in place, it becomes very difficult to actually execute and get to the point where you can be successful.
Yeah, this really extends well beyond our money, is what I was hearing there. And money is a big deal, obviously. It's what we both talk about and teach about, but building these plans and even just learning how to plan with your money is going to trickle over into so many other areas. I've seen that in my own life with like meal planning or trip planning, right? You just become better at planning if you get your money in order.
Exactly. I mean, one of the things you often see, if there's some level of stress with money and just not having a plan in place, it creates stress in other areas, whether it's with family, friends, or even in work. And so having it front and center, understanding where the money is going and what you're trying to do with it, whether you want to take a vacation, whether you want to save for retirement, or whether you want to give to a charity, it's important to understand what you can do with each and how you can be successful in either goal.
Yeah, and building a plan around all that helps with that success, because then you can start to have a sense of direction towards it and you actually have an outline for what you're working towards.
Exactly. And I would argue the sooner that you learn to do that, the better, because it will turn into a habit. And the earlier that you start saving and having a plan, the easier it will be later in life to either, as an example, retire early or do what you really want in life and not be beholden to trying to catch up for lost time.
Yeah. How much easier is it to plan financially when you're maybe in your 20s or 30s versus trying to figure it all out in your 50s?
I think it's a lot easier from the standpoint of if you cover yourself early and you understand what the risks are, even on the insurance side, you avoid liability issues, where you may be paying a third party because you didn't have the proper coverage, or just the benefit of compound interest. The longer that money is sitting in there, it's working for you, as opposed to if you make decisions where you have a bunch of debt and you end up in a situation where it's working for someone else, like the bank or the credit card company.
Yeah, there's a lot of opportunity, of course, on the investing side. Like that's the one that's kind of obvious, but there's still so
Yes.
much other opportunity in so many other areas. If you're able to get like a plan around debt figured out before it becomes a big problem in your life, and all these other areas like insurance you mentioned, if you have your estate stuff in order and you have some thread of a retirement plan starting to be built, it's just so much easier as you look at it out the gate.
It is, and I'm a proponent to be realistic as well. A lot of students, a lot of young adults getting out of college, getting out of school, they have the student loan debt, which it's not like something you can look away from and pretend you don't have. So really, it's a matter of coming up with a plan to work through that, while at the same time not shorting yourself in other ways, like with retirement and saving for that.
Yeah, and it really just it takes a plan around all of it. But the one thought that I keep having come to my mind, especially for young adults, is we just mentioned a lot of different subtopics within finance, right? Within this financial plan. That can feel overwhelming. You start thinking, how do I do an estate plan, right? That sounds like a big scary word. You think about a debt payoff plan, buying a home, right? There's so many of these things. Why does money seem so overwhelming?
I think part of it is most people, if you look at the education system as an example, it doesn't do a very good job of adequately training people to prepare them to understand consumer finance and all the jargon. And, I really say in a lot of cases, you have young people coming out of college with no real understanding of how to handle money. Really, I almost equate it to being in London in a fog bank. I
Mm,
consider it financial fog. And if you sit around and wait to have someone try to help you, oftentimes you're going to be sitting there for a long time. And so, really, it's the small steps that you take. The small steps become big steps. And often it's just a matter of working through over time, understanding that changes just don't happen overnight. And really, it's a matter of educating yourself and finding the right resources, whether you have debt, whether you're just uncertain about what direction to even go in. There are resources out there, but you want to make sure that they're the right resources for you.
yeah, fog is such a great way to put that. I really like that visualization. You're just kind of surrounded by all this like foggy, blurry stuff, right? Like there's just all these different things around you that make it hard to see your next step forward. And one of the whole reasons behind this podcast is that if we connect with other people and talk about money together, that fog can begin to clear, or we move through it with other people so we have a little bit more ability to see around us. How can talking to people about money and just getting these conversations started help with that?
Well, I think the biggest thing that I see, whether you're a parent or whether you have a significant other, really having an open line of communication. And really, I would say there's a big part of humility that goes along with it and being honest. Anyone that hasn't made mistakes around money is simply lying, because most people, when they become adults, they're just not prepared properly. And you have some people that I compare it to a marathon almost, where you have some people that are at 7 mile marker 7 or 8 because they had family, they had certain mentors that helped work with them to better understand money. And then you have people standing at the starting line that don't even know what direction to go. And so that's the unfortunate reality. Because of the way things are these days, there's so much information. It's easy to get certain things answered, but in a lot of ways, it's easy to get overwhelmed quickly. And that gets really to the more open you are, the more you can communicate and find people that are willing to work with you, whether it's a mentor or what I call an accountability partner, someone that is similar to you, that has similar interest and similar financial needs. If you can bounce ideas off of one another, it can go a long way to kind of finding the right direction and not making a whole lot of mistakes.
Yeah, having a group of 2 to 5 people that you can just kind of sit down and say, "Hey, once every 3 or 4 months, let's have a just a working money meeting where we talk about things that are changing and adapting." That can go a really long way just to getting new ideas into your mind.
Exactly. I mean, you see a lot of that with very wealthy individuals
Hmm.
where they have clubs, investing clubs specifically that are tailored to people with ultra high net worth because they realize that how you learn is from learning from other people and learning from their ideas and taking ideas away from others.
Yeah, and just having a network of people, and if you can utilize that network, like that exists in business too. Like beyond these like personal clubs, there's these business networking groups where it's a bunch of people that are essentially competitors sharing ideas, right? Like it seems
Yes.
counterintuitive, but it lifts everyone up in that group and helps everybody out. So it's a great idea.
Mhm.
I do want to move into some questions here and get to learn more about your financial life inventory plan as well. But let's start
Yes.
off with just a question of, well, let's go into what is it? What is the financial life inventory?
So, I have two books. The second book is for people planning for retirement, but really, I feel it works for most people because the first thing that I've learned over time is that people always ask me, they say, well, what do I need to get started? How do I put all the pieces together? And really, it's a matter, before you do anything, it's a matter of really, I would either say like triage, where you look at everything and you attack it based upon the greatest need. But in order to do that, you really have to take an inventory. So the first thing that you always have to do before you can really make any changes or understand where you stand is to take an inventory of what you have. Because if you don't know what you have, it's very difficult to make the appropriate changes and have things start going in the right direction. And so the financial life inventory plan, it's about a 15 item agenda that you can walk through. And it's not meant to be walked through in a weekend. Really, I look at it as almost a 6 to 12 month process based upon the more complexity you have, the more pieces there are. But even for someone starting out, there's a lot of things that they could use for their benefit. Really, what I try to do is make it so it has a starting point, an ending point, and it's a matter to have accountability that goes along with it.
Yeah, that we just talked a lot just previously about how that accountability is going to be a huge piece. The other thing I heard you mention in there was this isn't going to be over a weekend. How have you seen
No.
people taking time to actually like digest their financial situation? How can like giving yourself a breather to take 6 months to
Yes.
really understand it? Is that valuable?
I think the most important thing, if you have people with New Year's resolutions, if you have people that say, I'm really concerned about debt, or I start looking at my debt and I want to get that paid off, well, what's the rest of your financial life? And really, it's a matter of looking at your overall financial life and really taking inventory. And then what you want to do, you really want to put it together and have a written plan, ideally, but you really prioritize the most important components. As an example, the two biggest pieces that I really look at are one, if your employer has a match, if you're at all possible, you want to make sure you contribute up to that match. If you stay there through the vesting schedule, how long it takes for that money to be available for you, that's free money for you for your
Hmm.
future. The other is it's important to prioritize and understand your debt. Debt can work for you, but in a lot of cases, it really works against you. And oftentimes, it doesn't work well if you don't understand it. And it's the reverse of compounding. You're
Yeah.
compounding interest for someone else other than yourself.
Yeah, that'll tear your financial life apart if you're not careful. But one of the things I wanted to emphasize there is when you get this plan in place and you have an understanding of your financial picture, debt is a place for opportunity as well. I've mentioned on this show before that my wife and I have strategically used some 0% credit cards for some education components of our career. And we knew we would easily have the money to pay it off on time. We had a plan in place beforehand. That's what's essential because you don't want that credit card interest to hit. But we were able to use these credit cards, and we're coming up on one being due here in the next 2 months or so, and we just have the money sitting there waiting. And I did the math, and that money sitting there waiting has made us a few extra $100, right, or something like that. So it's all about a
Exactly.
plan.
It is, and if you can follow the plan, and the plan doesn't have to be perfect. They've said
Hmm.
perfect is the enemy, really, of great. If you sit around and try to find something that's perfect, you're not going to do anything or get anywhere. It's really a matter of working through debt, your savings. It's also just looking at your credit. Is your credit frozen? Do you have any sort of documents? What happens if you're in an accident? Is there a document there that will help someone come in and take care of you? No matter what your age is, are important. And it's just not something that school teaches you or even really think about. The prioritization is really looking at what your debt is and what your savings are, but there's a whole lot of other moving parts around that.
Yeah. And when you can walk through a process where you really just write it all down and honestly look at it, that's going to just help it's going to help your mindset in a big way, just to be like, here's where I am and here's where I want to go. And I think what's really cool is you can naturally begin to plot that path in your mind. You can begin to understand that, oh, I need to cut back on how I use credit cards without feeling so restricted. And I think that's a key piece about putting it all down first, is it feels more empowering to make these changes rather than restrictive.
Yes, I think the other part about having a plan is you really want to be realistic about it. And you also want to create a habit. You want to view the plan on an ongoing basis. The first part is the heavy lifting, where you take, based upon how complex your situation is, it may take 6 to 12 months to get you to where you understand things, but it doesn't end there. Really, what you want to do is every 6 to 12 months, really look at everything, especially as time goes by and you get pay increases, you have different life events happen. It's important to assess everything on an ongoing basis to make sure you're benefiting, so that, in the end, when you retire or whatever your goal is, that you've taken full advantage of everything you can.
Yeah, and you just keep checking on it every now and then, and it's a
Mhm.
progressive process where you just keep learning. You don't have to know it all right out the gate. I like to joke with people, like, if you want to get into investing, you don't have to go learn what an options trading is right out the gate. You may never
Yes.
need to know what that is, but you just
Yes.
start one step at a time, and you can avoid a lot of this confusing jargon that there is as well.
Exactly. And, sometimes people say to me, well, I'm going to wait till I have
Hmm.
$250 a month, or I'm going to wait till I have 500 a month. Well, the reality is the best time to start is now. And it doesn't really matter the amount you start with. It's a matter of starting and working through, and really automating is the other side of it. I mean, the benefit of technology is you can automate your savings, get it out of your checking account where typically it'll disappear.
Hmm.
Things have a way of working these days that way, and really getting it into a savings account. And once you reach a certain amount of emergency savings, really starting investing for your future.
Yeah, and I love the idea of getting the habit started, because you talk about, like, oh, you're going to wait till you have 500 or $1,000 a month to invest. It's like, no, the most important amount you can invest is that first couple $10 a month, $20 a month. Now, is
Exactly.
that $10 or 20 going to make a difference? No. Like, it's not that big of an amount that's going to change your entire retirement picture, right? But it will change it in the fact that it actually gets you moving. How have you seen taking small steps towards these habits just to help the people you work with?
Well, yeah, and that's what I encourage. I've always said, the biggest thing, even with budgeting, I mean, I think that's really another foundation, is budgeting. Really a matter of going through your expenses. And with this technology now, it's pretty easy to do that, to go through and look at what your expenses are, look at where, rather than going out once a week and getting a coffee at Starbucks, maybe redirecting that. And if you take what that cost is on a weekly basis over a month, you can have a little bit to put aside. And then you factor, as you get pay increases, just increasing that money over time. By doing that and starting now, you have the benefit of what we talked about before, of just compounding in time.
Hmm.
Really, in investing, those are your two biggest friends. And the shorter amount of time you have, they're your biggest enemy.
Yeah. Yeah. Time is a huge benefit if you're just getting started. And I want to move us into a little bit of a conversation around those people who aren't right on the precipice of retirement, which is the majority of people, right? Like, there's this small window of
Yes.
people that are actively thinking about it and getting ready for it. Most of us are just living our lives, trying to survive, right? Pay for things, buy groceries. How can we begin some of these financial planning steps, or what are some of these small steps that you can take when you seem so far away from retirement?
Well, I think some of the things, the earlier you start, the less likely you are to develop bad habits. It's like most things, the more someone is involved in something, whether it's just life, the longer that you've been working, the more bad habits you develop. And I look at, if you can develop, there's really some mistakes, like lifestyle creep as an example. That's like a term that I'll use,
It's a huge
where,
issue.
you know, yeah, it's a huge issue, because you spend, and you get these raises and increases and bonuses, and they just go to whatever you want to spend, that is oftentimes just wasted, versus putting some of that aside, looking at what the future is. And the other would be just, especially starting out young, being underinsured against risks. Really thinking that, you're not going to get disabled, you're not going to unfortunately have an untimely death. It's really a matter of making sure you're prepared for those things so that your family can be taken care of, or whatever your goals are, that they aren't just completely incinerated because you didn't think about it, or you just didn't do this. You knew about it, but you just didn't take action on it.
Yeah, disability insurance is one of those massive things, especially if you're young and you're just getting started in your career. You don't think about it, right? And I joke about this because this is what got my wife and I to realize we needed these insurances. Is we love biking to work together. And if there's one thing that'll scare you into getting disability insurance, it's biking to work, right? It's
Yes, I'm
unfortunate, but
sure.
it's
Yeah,
the truth, right? And so
hmm
like we got on that very quickly, and thankfully nothing has happened, but it's such a peace of mind knowing if it did, the other planning we're working on isn't completely thrown out the window instantly because there's no money coming in. So how
yes,
have you
and
seen insurance be helpful? That's what I want to talk about a little bit next.
I think a couple of things. One would be liability insurance. Even if you don't own a home, if you rent and you have a dog, as an example, most people have pets these days.
Hmm.
What happens if that pet bites your next door neighbor? Are you in a position where you can just write a check? Or don't you think you should have something in case something, God forbid, like that happens? Or somebody over the holidays or at a specific time, they take your car, or they borrow your car, or they even drive for you, and they're not properly insured. You have to prepare and plan for the worst and hope for the best. And if you can do that, you end up somewhere in the middle. And that's really the way I view it.
Yeah, and having those insurances in place allows you to take off of your mind having to, I guess, be so nitpicky about some of the risks that you take. Like, is it such a massive risk if your family member drives your car? No, not necessarily. They'll probably be okay, right? Like, that's what you hope.
Yes.
But what
Yeah.
if that, like you said, plan for the worst and hope for the best? It's probably going to be okay, but you just don't want to deal with that one time it's not and the impact that that has on your financial plan.
And it's just, you can look at the billboards and understand that there's a lot of liability and people chasing people for dollars out there. And so you just don't want to be on the wrong end of that. And that's not something that people really, you're not taught to think about that or do that. But that really, just like you mentioned, disability, I think for someone young, those are really the two biggest risks, where you have a liability claim and you don't have any sort of coverage, and you're sitting there having to pay someone that was on the other side of the claim a payment every month that could be going to your savings.
Yeah.
And the other side is, if you have an early disability, how are you going to take care of yourself and your, potentially your family in the future?
Hmm.
It's not even a question of retirement. It's a matter of getting through everyday life.
Yeah, which is just a so much scarier and tight place to be in. And if you thought it's hard to save for your financial planning goals that you have right now, just imagine how much harder it'll be to save if you have like you said, a monthly payment going to someone else for some settlement that you didn't expect to happen randomly because, like you said, maybe your dog bit the kid next door and it got
Yes.
infected and it was a bigger deal than you thought it would be. Like you just figured it'd be a few stitches and then you had this whole big problem. Like that just sounds so crazy to have to deal with. So that's why insurance can bring some of that peace of mind around those areas. I do want to move us into some cash flow and debt conversation as well, because you brought up student loans early in this conversation. And those are something that honestly weigh on a majority of people's minds, whether you're a young adult just coming out or you're Parent Plus loans or you're graduated
Mhm.
20 years ago and you still have some student loans. How can debt be so dangerous when it comes to our cash flow and planning around all that?
Because it's in a lot of cases you have to service it, and it's often the fixed cost that doesn't give you a whole lot of flexibility. If you're debt free, you have a lot of flexibility of what to do with your surplus. Oftentimes, the more debt you have, you don't have a surplus, and
Hmm.
unfortunately, you have to cut corners. And sometimes, if you cut corners, you may need better health care, but you get a high deductible when you have some health issues, and you end up in a situation where you end up having to pay a huge deductible, and you don't have the money sitting aside. And so, a lot of times, medical debt is one of the things that people don't often think about, but it's one of those things that will just be added on if you don't have an emergency fund, and then you're paying interest again to the bank or to the credit card company, and it's not going towards what your future is. And as we talked about before, debt is not bad by itself or in itself. It really, though, oftentimes gets away from people, where they use it for one purpose and it ends up really working against them, almost being, I would say, like a 200-pound weight around their back that they
Hmm.
can't get away from.
Yeah, because if there's like $400 or $500 a month can be broken up in a lot of different ways to do a lot of different
Yes.
things. But if it's just going
Yes.
towards one loan payment every single month, like you said, feels like this weight that you're just dragging over your shoulder for.
And you look at it and you don't have a whole lot of, if you have debt, you can't put money oftentimes into savings. And a lot of times you look at it and you say, well, in order to have freedom, you usually have to start, in a lot of cases, start a business and do certain things. Well, to do that often, you have to be able to have savings as well as oftentimes get debt for the business. It's often hard to do that if you already have a fair amount of debt. The banks aren't going to lend, they look at what your overall risk is.
Mm-hmm.
And so oftentimes you can just be stuck in a place without good ways out because of the debt that's accumulated on top of you.
Yeah, let's, for example, just go down this hypothetical route of say someone's listening that they've never really dealt with debt. They've never gotten into credit card debt. They're maybe looking down at some potential student loans. What are some of those small steps that they can take to build a plan around like starting a healthy relationship with debt out the gate?
Yes. So what you really want to look at before you open a credit card is more when you spend something. You always want to look and say, if you're not spending this out of your bank account where you're just monthly, if you have a card, you're just paying it off every month in full. If you're looking to buy something or finance something, you want to look at it. And I would say there's a certain rule, and I would call it almost like some people say 6-month rule. I would say like a 30 to 60-day rule, where if it's a discretionary spend where, it's not something that you absolutely need, it's a good idea to have a cooling off period with it before
Mm-hmm.
you go in and buy something where you create debt for yourself, where you're paying someone else interest. And then if you do that, you want to make sure you understand the most aggressive way to get that debt down without really shorting yourself in other areas. And so often, that's great if you can do that. But in the certain situations, like with medical debt, you look at your vehicle, if you don't have enough savings, oftentimes you have to go and borrow if you have an issue with your vehicle. And then you have debt trying to figure out how to pay that off. And it's almost, I would almost say in certain cases, it's almost like a spiral. So, the more you can avoid these certain spending where it's not very well thought out, and the less debt, obviously, the more flexibility you have in life, whether it's retiring early, whether it's starting a business, all kinds of opportunities. But the more debt you have, the more you're beholden to the debt.
Mm-hmm. And yeah, the picture you painted there of it being a spiral is too accurate because it's so easy for it to run away from you. Where suddenly, like you said, whether it's a medical bill or car repair or just those things that you don't expect, that maybe they're not these massive emergencies, but they're maybe a couple $1,000s here and there. And then suddenly a credit card's maxed out. Suddenly you're paying more in monthly credit card bills than you ever thought possible, right? You just let it kind of slip away and it can get running very quickly because of those high interest rates.
And when I say spiral, I don't even necessarily, I mean, obviously financially, but I mean from a health perspective as well.
Yeah.
Typically the amount of stress it creates, it puts a tremendous amount of pressure on your health as well as on your relationships.
Yeah, no, that's a huge one. I've seen research and reports out there before of just like the physical and, like you said, mental stress that debt can have on
Mm-hmm.
you. I wish I could remember it off the top of my head, but I'm sure there's reports out there of it like actually shortening your lifespan potentially because of just the
Yes.
actual stress you have. It's a very real
Yes.
problem beyond just our money. That's a great point.
Mm-hmm.
As we're beginning to head towards the end here, I wanted to round out with just some hearing like a personal example of how this sort of planning can help you. And my final question here for you before we wrap up will be, how have you seen financial planning and building this plan help you with just your own money?
So, and we didn't talk about it at the beginning, but I probably understand student loan obligations and student loans probably more than anyone. When I graduated college, I got a letter from Sally Mae about 6 months before graduation that said I owed about $1,000 a month for the next 10 years. And that was back in the 90s. So, I didn't even know who Sally
Wow.
Mae was. I thought they were a magazine subscription service. I didn't know they were a student loan
It's an
servicer, and I didn't
expensive
even own.
magazine.
Yeah, exactly. I was like, they're eventually. I see how they make their money now. So, uh, but I ended up going into the military, and they had a loan forgiveness program, and so as part of service, they forgave my loans and deferred them, and then forgave them. But really, I look back at how little I knew And at one point you wake up and you realize all the things that you could have done. And that's the case for a lot of people. You can't really look back. And that's the one thing that I learned from the experience. If you look back and say, well, I wish I would have known more about the loans. I wish I would have done this or done that. You can't change the past. And that goes with debt. That goes with relationships and life in general. But what you can do is you can really learn from them. And I think that's really the most important thing. Whether it's a failure, whether it's debt, if you can come up with a plan and work through that, you'll be so much further ahead on the other side of that, and you'll be such a stronger person. And really, I've said, that over the 25 plus years that I've been in the financial services industry, work with families, business owners, with the clients, the ones that I see that are oftentimes the most successful are the ones that had the most stress and the most challenges early on. It's better to have the challenges early on than when you're approaching retirement and you have all these things hit you then, because you don't have that time, really the ability to crawl out and work through and learn from the mistakes and become a better person from them.
Yeah, that's a fantastic story there. Like if you can go through the things early, like accept what happened, don't dwell on the past. Maybe you made a mistake. Like you mentioned at the very beginning, there's not a person out there that hasn't made a mistake with money, whether it's investing in the wrong things, speculating, or gambling on some sort of crazy cryptocurrency or something like that. If you've made the mistake, it's okay. Accept it. Plan going forward. Be grateful that you learned that thing now. That's what I really am going to take away from this, is if you learned something, accept it and actually learn from it and move on. But Jeff, this has been a fantastic conversation. I've really enjoyed this one, talking through financial planning. This has been great. And as we're wrapping up here, I have two final questions for you. And if you have anything else you want to share, please feel free. But the first question I have for you is, how can people connect with you online? And feel free to plug your books here as well.
Sure. You can go to my website, jeffreypanik.com. That's JEFFREYPANIK.com. As well as I have two books, one for young adults, really talking about building a blueprint for your future, understanding all these pieces that you don't learn in college or in high school. And then I have one for pre-retirees, usually 3 or 5 years away, that really trying to put all the pieces together. And on my website, I have the financial life inventory plan, the blueprint with that, as well as I have a YouTube channel. So what I try to do is just provide information. I think really it's important if you can be objective, educational, and try to, I think there's a lot of value in trying to help people, especially financially.
Yeah, that's fantastic. And of course, the link will be in the show notes for everyone to connect with you or learn more if they would like to. But the last question I have for you here, and we've kind of touched on it a little bit, but what's the one thing that you wish you had known about financial planning when you were just getting started with money?
So I think the biggest thing that I would take away if I had to do it again would be, it's never too early to start. Whether you're in your teens or whether you're 40 or 50, the main thing is to start and work forward. And, obviously you have to work through what's happened in the past, but the main thing is to really learn from the past and work forward. Some people unavoidably have to have student loans, and they have to get credit cards. It's really a matter of trying to figure out what your options are around there and trying to make the most of everything moving forward and just trying to learn something. The one thing I always say, it's every day you should learn something new. With the way the technology is, you can always go on and find something and learn. And, if you can keep learning, you're going to be valuable not only for yourself, your employer, and I think, just people around you in life.
Yeah, that's such a great note to leave it on there, Jeff. Thank you for coming on the show.
Thank you so much. Thank you for having me, Skylar.
Thank you so much to Jeff for coming on the podcast. I thought that was a phenomenal conversation, and I know I enjoyed it, so I hope each and every one of you enjoyed it as well. And if you did, please consider sharing this episode with a friend, because we talked about a lot of great things as we're wrapping up here. We talked about how important it is to have a plan for our money and how that plan is going to give you just abundant opportunity if you're able to take steps in the right direction to manage things well financially, whether it's staying out of debt, getting out of debt, learning from your past, and then continuing to move forward. I thought that was a great note to leave it on, that if we just continue to move forward, learn as we go, continue taking small steps with other people as well, that's a huge piece too. Work with other people, talk with other people about money. That can be a huge way to really just motivate and supercharge your financial journey, because you're going to learn so much more from other people than you ever could just studying online, right? There's so many books, there's so many YouTube videos, great podcasts, all that stuff is great. But really, when you sit down and talk with someone about your specific situation, you can get leaps and bounds ahead. So if there's one thing you take away, it's go out, find a money buddy that you can talk to about money, and then start having a money talk with them. And I guarantee you're going to end up in a better place. But that does it for today's episode. Thank you for listening to today's episode. The best way to stay up to date and connected with all things Money Talk is to subscribe to the podcast. Have a question or a comment? You can find the links in the show notes to email me or leave a comment on Spotify or YouTube. And if you're looking to get started with budgeting, sign up for a Money Talk today. I'd love to work with you and help you with your budgeting. The link is in the show notes. And if you're a young adult or no one in your life who could benefit from some great financial planning advice, check out Financial Planning for Young Adults right where you're listening to this show. And remember, the best way to learn from today's episode is to go and have a money talk about today's topic with a fellow money buddy. Thank you for listening to this week's episode of Money Talk. I'm your host, Skylar Fleming. Have a great week.
Thank you for listening to Money Talk. This show is provided for informational and entertainment purposes and may not be specific to your unique situation. Please be sure to do additional research before making any financial decisions.